We've got the 15th anniversary of the Spider Gold Trust, also known by its ticker GLD. Now, this launched way back in 2004, 15 years ago. I covered that on its very first day. Look, folks, I have brown hair here. This is 2004, and thanks to the World Gold Council, I was able to bring in a pile of gold. Those are two big burly guards standing on either side of me. The World Gold Council provided this gold here. Dan, Invesco has its own gold ETFs, the DB Gold Fund, that's gold futures. But gold, the ETF concept has been very successful in gold, and as well as other commodities. What do you think about gold and ETFs right now?
Yeah, look, gold is always, you said for 15 years now, had a real place, in the ETF world. I think clearly from a diversification perspective, whether it's gold or even broader base futures, commodities are kind of out of favor now for the most part. But as a diversifier, I think, commodities broadly have a real place in a lot of portfolios for clients.
You've been pushing this for years, the diversification of commodities.
Well, when you look for the performance of gold, GLD specifically in the last 15 years, it's up a lot more than the S&P. And the other thing is we talk regularly about buying gold for inflationary purposes. There's no inflation, but back in 07 to 2012, the price of gold went up 3x during that period of time. We didn't have any inflation. So back to Dan's point, diversification is key. We're starting to see more flows, and they've had $5 billion come into GLD so far this year.
Well, so this is what annoys me about the gold bugs, my friend over there, Todd, is that 10 years ago they said, oh, this is a hedge against inflation, that we didn't have any inflation. Now it's a hedge against uncertainty, so this is why it's gone up so much this year. It's kind of like you look at it, and it's whatever you think it is, it can provide some explanation, because it's really an alternative investment. It doesn't necessarily move along with equities in a way, or am I just being a sourpuss?
No,
here?
I think that's exactly the case. So it has diversification benefits. Sometimes those work, sometimes those don't work. It's going to zag when the market zigs quite a bit. But what's also impressive about how well GLD is doing from a flows perspective this year is it now has much cheaper competition. A whole host of products in the last 3 years have come to market that are from granted shares from a whole host of other providers that are cheaper, and yet GLD is the default product.
The truth is that this is really a play on the Indian consumer, biggest buyer of gold in the world. They use it. It's perfectly fungible for family wealth. They exchange it for money freely in India. It's part of the store of value of a household's net worth. China to a lesser extent, but as well. So to me, this is sort of a play on the health of the Indian and the Chinese consumer, and a little bit perhaps on central banks.
That's right.
As well, and their interest in that. Just a little opinion there.